All right, Bulls and Bears back with another dose. The chaos is spreading, the unrest, the protests, and the costs. Not just the damage, but the cost of trying to tamp down these protests, folks. It's outrageous. It's crazy. The cost of living continues to go into a territory where most people are not wanting it to go. Cost of living is rising overall. Last report, we talked about home prices coming down a little bit. We're seeing inventory rise in the housing market. But today, got some other news I want to get into here. But let's start with the cost of these protests here and what's happening with this. And what we're seeing here is these deployments here with troops on the streets, actually. $134 million, folks, and it's supposed to last 60 days. Now, to some people, they're saying that's a huge amount of money. It's outrageous. Other people say it's a drop in the bucket because we're $37 trillion in debt. So what's another $134 million? But yeah, troops on the streets, folks. Nobody thought it would come to this. We told you last year things are going to escalate. They're going to get worse. And that unrest was going to get worse. And we haven't even seen the fallout yet from the economic situation that we're going to see. Just wait till people can't pay their bills, folks. You're going to see what's happening today. It's going to look like a cakewalk because you're going to see so many people in the streets and you're going to see massive carnage here. But let's just talk about what's happening right now. These are expanding to several different cities. 5,000 National Guard troops, including Marines, in Los Angeles here in response to these protests. And they're protesting a lot of different things, of course. One of the things people are protesting is the big military parade that's coming up. That's going to cost even more. And we're looking at about $45 million for that. Actually, $45 million. So it's actually, I thought it was more. It's actually cheaper than the troop deployment, right? Because that was $134 million. So people complaining about the parade, they need to complain more about the military presence because that's costing even more. So crazy times, folks. In the last several days, though, the Pentagon has approved 4,000 National Guard troops and 700 active duty military to head to Los Angeles. And we've already seen what's happening up there. Cars getting burned, people dropping rocks off of bridges. So be careful if you're in the LA area. But I've heard that a lot of other major cities are going to see this. So if you're driving or if you're just in the cities, be very careful. Let me just pull up a quick map on it here. Then we've got some other economic financial stuff to get into. And taking a look right here, here's one of the, looks like protesters. If you see her, maybe ask her for a phone number. I don't know. Let me take a look here. Here's the map of the protest that's going to be happening here, of course, here in San Diego, Los Angeles. Looks like San Francisco Bay Area. Most major cities, bottom line. If you're driving around, be careful, especially under overpasses, because I did see videos where they're dropping stuff off the overpass, right? So that's ridiculous. It's not going to accomplish anything, but that's what people are doing. And you can't expect the people to be rational, especially in irrational times. Be careful out there, bottom line here. But let's talk about the economy, folks. We're told, for months, we've been told cost of living is going to come down. Prices are going to come down. Well, what have we seen? Eggs now going back up because of all the problems with the eggs and the outbreak. We're seeing housing market not coming down, just slightly. But things could be changing towards the end of this year because we're seeing massive shifts in homes for sale. And I think a lot of people are seeing the writing on the wall, as we predicted, because of all the layoffs, especially the federal layoffs, and because the people having to pay back their loans. More people are panicking and putting their home on the market. But the problem is buyers, it rhymes, buyers have dried up, and everybody's uncertain right now. So people are being very cautious about making a big investment like buying a home. But let's look at this here. Economic growth is on a course to be the weakest in a decade. The weakest decade since the 1960s. So going back over 50 years, the 2020s is scheduled or on pace to be the weakest decade. Now that's economic growth. Most people, if you ask them, they don't care about economic growth. They don't care if the economy is growing or not. They're worried about their own budget and they want things to be cheaper. They think things cost too much. They think rents are too much. Gas costs too much. Home prices are too much. Everything's costing too much. So people really, when you ask the average person, the average working person, they don't care about growth. When was the last time you heard anybody complain about economic growth? Right? You're talking to somebody at the grocery store, maybe a friend, maybe a relative. Oh, economic growth. It's bad. I wish we had more economic growth. Nobody says that. Nobody that's just an average person, maybe an economist, but your average person now. People are more worried about, oh, look what this cost. Look what that cost. I went to the mechanic and simple thing costs $800, right? That's what people are concerned about, not economic growth. So there's these articles out there about economic growth. Actually, if you ask most people, I think people would want growth to crash. If that meant lower prices, people don't care if growth collapses. People want a collapse in some cases. A quick example before we move on. When the housing market went crash, back in 2008, 9, and 10, when it busted, economic growth also declined because of the lower economic activity with that housing downturn. But that's part of having deflation. That's part of having prices go down, is you're going to see economic growth slow down and sometimes even go into reverse, which, again, people may want that. It may be a good thing. But still on real estate for a minute here, a lot of investors are putting their homes on the market because they see the clouds and they see what's happening right now. And in fact, investors are selling at a record pace. A record share of homes are putting their homes on the market, a record number. Investors are selling a record share of their homes to cut their losses, especially in 5 states. Let's see what they talk about here, if they give us the states. Mostly in the Midwest, Missouri, Oklahoma, Georgia. But overall, investors are putting their home on the market like we haven't seen in a very, very long time. So why would that be? Well, there's a few reasons. One is rents are weakening and they're down year over year. So investors that bought thinking that rents were just going to go up and up and up and that they could raise their rents each year, they're seeing reality right now. They're seeing that people can't afford these rents. And not only that, it's going to get worse because everything happening right now with the layoffs, with the loans that have to be repaid, with the AI replacing a lot of jobs and layoffs because of that, and other details that we'll get to here in just a few minutes. But real quick, speaking of people that can't afford the costs and the cost of rent in this case, look at this, folks. 2025 is on track to see a record number of evictions in Washington. And there's many other states. This just happened to come out here yesterday, June 9th. This report came out. But if you look, you're seeing record evictions occur across many different states. And we said exactly that would happen because people can't afford this. Without all the programs that were pumped into the economy in 2020, you would have witnessed a massive collapse. And yes, there would have been deflation. The housing bubble would have went bust. Rents would have crashed. Everything would have come down. The cost of automobiles would have come down. But of course, they kept it propped up. And the term we use here is kicking the can down the road. And the further they kick the can, the higher prices remain. They're keeping these bubbles inflated. So are things going to change this year with the protest and the massive transformations that we're seeing across the country? And remember, when it comes to the housing market, there's finally a prediction of prices coming down. Remember, these places like Redfin, realtors, of course, they're not going to admit that the housing market is weak. But actually, they're predicting a price decline of 1% this year. That's very rare to see out of Redfin, and they're reporting this out of Housing Wire. Home prices will decline 1% year over year by the end of the year as we see a record gap between the number of sellers and buyers. So a lot of sellers, but not many buyers. And that's actually not an all-time record, but it's the most we've seen since 2013. So about 12 years, we've never seen numbers like this. So massive changes coming this year, folks, in the housing market and across many different spectrums here of our society. But folks, let me let you in on a little bit of a secret. Sorry, my light just went out here. A little bit of a secret. Things are about ready to pop off in this country like you haven't seen in a very long time. And I've said here before, and I'll say it again, what I think this situation that we're headed into, it's going to be massive chaos, unrest, and I think it's all contrived and put in place to cover up the economic collapse here. Let's talk about what's happening here with student loans here, folks, and listen to this report on this.
You're going to want to listen up. This summer, the White House will begin garnishing your Social Security benefits if you have defaulted on your student loan.
And right now, there is a pause on the plan, but people are already seeing some of the consequences. NBC 10's consumer investigative reporter Bianca Beltran takes a closer look.
Federal student loan repayments are back and borrowers are struggling to keep up. A report from the Federal Reserve Bank of New York found delinquency rates for student loan balances spiked after the nearly 5-year pause ended. Borrowers are considered delinquent on their loans when a payment is more than 90 days late.
People are finding themselves in a situation with higher than normal consumer debt. And then when you add these student loan repayments into it, I think people are just continuing to struggle and they don't really know what to do.
Oh, you think so? What have we been talking about here for years, folks? As soon as these programs are done, people are done. I mean, that's a bottom line.
As people miss their payments, credit scores are also taking a hit, plunging more than 100 points for millions of newly delinquent student loan borrowers.
The first step is to educate yourself on where you are today so that you can make a clear path to get to exactly where you want to be tomorrow.
Borrowers struggling with their payments should reach out to their servicers. Some federal loans offer rehabilitation and consolidation.
If you take advantage of, for example, an income-based repayment option, you might see amounts that are lower than a regular payment plan option because...
All right, bottom line, folks, nobody has any solutions for this. Nobody can afford life right now without borrowing massive amounts of money, without taking on a whole bunch of debt, and even college education. Nobody can afford college, folks, if it weren't for these loans. And it's a bottom line. Nobody could afford anything if it weren't for loans and borrowed money. And that's a big problem, because for the economy to keep growing, if you want to stay growing, that means you have to continually have people go further and further and further into debt. It gets to a point where people just can't pay it, folks. And that's what's happening right now. And you're going to see things, I think, come to a head this year. I mean, it's already beginning. I mean, we're already seeing the unrest happening right now, which, again, I think is put in place to cover a lot of this up here. And we're going to continue to see companies getting rid of staff, replacing staff with automation, AI, robotics. I'll look at this right here. Latest announcement, Starbucks to roll out Microsoft Azure OpenAI Assistant for baristas. It unveiled a generative AI assistant created with Microsoft Azure. The technology will roll out in stores in Canada. The coffee chain has been trying to simplify barista jobs and speed up service in its cafes as part of its turnaround plan. So we'll see if this actually is used to help baristas do their job better, or if it's going to end up replacing some of the baristas. I mean, I think it's going to replace them ultimately. Please let me know what you think about it down in comments, though. Couple things here to get into as well. We've got solar stocks in the entire solar sector collapsing, folks. I thought as time progressed, solar would become more dominant, and it's really only about 7% of electricity generated right now because of solar. But look what's happening with some of these investments here. I mean, we saw a big bubble and a lot of mania and hype around solar energy and solar stocks. Look at this. Sonova spiked up to about $55, folks. We're down below $5. We're down like below $1 right now out of Wall Street. Here's a few more. And it shows the surge since 2014. It was less than 1%. Right now it's about 7% of all electricity generated. This chart only goes up to late 2023, so maybe it's a little more now. But bottom line, folks, look at these other stocks here. SunPower spiked up to almost $100. We're now about $1. It's a mega drop here, folks. SunPower was over $10. We're down to under $2 now. Wow. Solar Edge was over $350. Now we're down, looks like about $25 on that. 95% drop. Sunrun, mid-90s, down to right around $10, 90% drop. Enphase Energy had spiked up to about, $340. Now we're down to just under $50. You get the point, folks. Solar has been a big loser. Unless you got out at one of those spikes, unless you got out at the top, investing in solar hasn't been very good, even though that's supposed to be the way of the future and the way things are headed. I remember when I was in middle school, I remember thinking, and even talking about it, that by 2025, everything's going to be solar. Cars are going to have solar panels on the roof, and we're going to just drive for free just off the sun. Not even close, folks. It's pretty much a disaster. And is it like that on purpose so certain people can make a lot of money? You know, these oil people, and, certain people want oil to come back as the dominant source of energy. So could that be what's happening? Please let me know what you think about this down in the comments. Be careful out there, especially in the big cities. as these protests spread, and they're going to spread drastically, I think by the end of the year, this country is going to look drastically different. And maybe I'm wrong, but I don't think so. Let me know down in the comments whether I'm right, whether I'm wrong, what your thoughts are. And we'll keep stacking, everybody. As always, bye for now. Big love. Peace.